Good morning, good morning, good morning. It is February 16th, 2024. It's about almost 8:30 in the morning here. And I'm going to do just a really quick educational video just on the S&P 500, just focusing on finding a top after the S&P 500 has made a new high, a new all-time high, rather. This strategy has worked, time and time again in the past, and so I want to go through all of this. But before I do, as you all know, this is not financial advice. I'm not your financial advisor. You are responsible for your own trades, managing your own risk, doing your own research, and as always, this is just my opinion on the market and a little research that has been done over the last several years. So let's go ahead and move on over into the chart. So when the S&P 500 starts to make new highs, something to really pay close attention to is the fact that the volatility index might also be making higher lows, because as we know, or as we should know rather, excuse me, when the S&P 500 moves up, typically the volatility index moves down, and vice versa. When the S&P 500 moves down, typically the volatility index moves up. So there is an inverse correlation between the two. But what we can do is we can work to make a determination on when we could be reaching a top, or really not like the top, but the top in the beginning of maybe a correction. As I always explain in a lot of the instructional videos that I do, it's really always best to wait for the pullback after the initial fall to really get into a bigger short position. Certainly, you can swing, short positions trying to catch the top, but a lot of times that does end up being a little bit of a fool's game, especially if you are one that likes to trade options, and you can get caught in the decay mode where your options decay and basically end up going to zero very, very quickly, because the stock market is a steamroller, and it is not apologetic when it comes to taking advantage of players that tend to gamble when it comes to playing options. So what I want to do is I want to rewind to the last all-time high. I want to take a look all the way back here, and this is back in December of 2021, January of 2022, when the S&P 500 was making new highs. Okay, so what we were seeing here, and I don't know if you already noticed, I already kind of removed this from the chart, but I want to put this drawing back on here. The fact that we were creating new highs, so we were creating higher highs here on the S&P 500, but when you correlate it with the volatility index, we were creating a higher low. Okay, so again, you're comparing the highs on the price action with the lows on the volatility index, and this is the first step to determining whether or not there's going to be a significant top. Now, after this happens, this is not to say, okay, this is where we go short. This is not to say we're going to get the top here. We're going to short the top. That is not how this potential, or not potential, but this particular strategy, that's not how this works. Okay, we're looking at this on a daily time frame. So we want to look 45, 60, 90 days into the future. We're not talking about what's going to happen before next Friday. If you want to trade options, you want to day trade, that is not this strategy, just to put that out there. This is more of a longer term, forward looking strategy versus a gamble based on what the price action looks like right now in like a 5 or a 15-minute time frame to determine what's going to happen over the next couple days. This is what's going to happen over the next couple months. That is what this is. And this only works after the S&P 500 makes new all-time highs. It can work if you're looking at the stock market in the middle of a corrective cycle, but it works best if you are looking at the S&P 500 making new all-time highs. That is where this does work best. So again, step one, find where the S&P 500 is making new fresh highs and where the volatility index is making higher lows. That is divergence, and that is what we want to see as the first step to this process. Now, the second step to this process is going down to a 30-minute time frame on the S&P 500. Okay, so let's go ahead and remove the drawings that we've got here. Okay, so we've got fresh highs, and this is correlated to this area right here. So I did create an indicator that does kind of help us out just a little bit. You can see I've got some markings on here that it's trying to help us make that determination, to make that indication that the S&P 500 is making new highs while the volatility index is making higher lows. So I did create an indicator that will provide this information, but it still does require a significant amount of human intervention when it comes to actually analyzing the chart, because again, we have to wait for step 2 to occur. Step 2 is a breakdown of the 250 period moving average on the 30-minute time frame. And not just that, you need the breakdown, but you also need a retest of that 30-minute time frame 250 period moving average. This is just a simple moving average. It's not exponential or anything like that. It's just a simple moving average. When that happens, after an all-time high and a breakdown of the 30-minute 250 period moving average and a retest, this is your best opportunity to take a short position. Again, don't think about Elliott wave when it comes to this. Like, you can certainly do whatever you want and overanalyze, but this strategy is very, very simple. You're waiting for a breakdown of that 250 period moving average on the 30-minute time frame, a clean breakdown, which what that's going to do when that happens, you're going to get some confirmation that yes, this is creating a higher low on that volatility index. We get that breakdown, we do the retest. This is where you will be looking to enter a short position. Not here, not here, but right here. That's where you're going to be looking to get into a short position. And that is on a retest of the 250 period moving average on the 30-minute time frame. Let's just go ahead and fast forward to today. What does it look like today? Because we have been creating all-time highs on the S&P 500. You can see I've been getting alerts after alerts after alerts that we're creating new highs, new highs, new highs. But what's the volatility index doing? Well, the volatility index, all the way back to here, has been creating higher low after higher low after higher low over and over and over. But as I also stated, what we are waiting for a breakdown of this 30-minute time frame, 250 period moving average, a clean break. Now, a little break like this is not good enough. We need to get a good solid breakdown below this. And what have we seen so far? We've seen like a little breakdown and it's been bought up, a little breakdown and it's been bought up. And even right here, it just retested that particular time frame. We are not getting a clean break of this. So until that happens, and just for the record, right now that's sitting at about 49.50, and it's just going to continue to creep up as we continue to trade above that moving average. So that's the way moving averages work. That's why it's a moving average and not a stationary average, right? We are moving up along with the price action, which is continuing to move up, at least for the time being. We're close to creating another high, right? We had an all-time high back here on Monday. That was just a few days ago. And we are about ready to create another high, right? We're going to create another high. And so far, it looks like we're working to create another higher low on the volatility index. This is going to increase confidence that we might see a top here in the next maybe week. Now, again, that's not the entirety of the strategy. That's just the first step. The first step is to identify a higher high on the price action and a higher low on the volatility index. But that second step, which is really, in my opinion, the more important one, is we got to break down below this. We got to get a move down at this point, all the way down here to 4,900. We really have to see a decisive move below this moving average, and then we need to retest it. That right there is where step 3 occurs, and that's where you're looking to actually get to some kind of a short position. Because when we talk about probability, and we talk about probability quite a bit, the probability of you catching the top is much lower than it is to make a calculated risk on a retest after a significant pullback. Okay? But you got to go down to this 30-minute time frame here after you validate that we could be creating a new fresh high on the S&P 500. And really, I'm talking about a pivot high, not just like continuing to create highs, because that's what's been going on here for the better part of the last 4 or 5 months. But what you're looking for is not just the fact that we're creating a high. You're not going to be looking at this as a doji that suggests that we're going to pivot. Those are different strategies. This one in particular is designed to catch tops, one, after they've occurred, and two, on the pullback retest to create the higher probability short position. So that, my friends, is the strategy on how to find a more significant pivot for an all-time high on the S&P 500. Because as we all know, the stock market is, again, it's unapologetic, and it will try and catch you in any way possible in order to take the money away from you. And so this is why, if you're going to try and play trades on all-time high after all-time high after all-time high, trying to get into short positions, do that with care, do that with good risk management. Don't put too much risk on the table. If you're doing that, I highly suggest, if you're trying to get into short positions on all-time highs on the S&P 500, that you try and stay away from options, or if you do take options, get some time on that, because pullbacks happen all the time. We've seen several pullbacks, even so far this year, but we haven't seen anything significant yet. Nothing significant to suggest that we are going to be pivoting and going back down to 4,500, for example. I don't see any evidence of that yet. I'll be doing another video here a little later to kind of explain what my theory and thought process is on where the S&P 500 may be going through 2024, maybe into 2025. So that will be a little more of an in-depth technical analysis of the S&P 500. But this video was intended to be an educational video on a strategy, because there are thousands of strategies out there. This is a strategy that you can use to try and find a pivot top that could result in several months of either correction or decline. So hopefully this video did help you. If it did, you know the deal. Like this video, subscribe, share with your friends. If you would like to have access to our Discord server, including having access to all of our indicators, the WaveMaster indicator in particular, you can find all of that information on BitDoctor.org. And last but not least, wherever you are in the world, I hope you're having a great day, a great night, a great evening, and take care, everyone.